Hello everybody, it's Tortoise Investing coming at you today with two dividend ETFs that you can buy and hold forever. We'll be taking a deep dive into them, looking at their top holdings and their dividend yields, expense ratios, all that goodness. If that interests you and you want more of this, make sure to hit that like button, hit that subscribe button. Both those things super free, super easy to do. Drop a comment down below. I greatly appreciate everyone's support. If you haven't seen it already, I did upload 3 tips for beginning or current investors as well the other day. So make sure to go over and give that a look and hit the like button on that as well. We're at 536, so let's keep growing the channel and our portfolios together. I'd like to hit 1,000 and 10,000 and just keep trucking along with this. I am enjoying this greatly and I enjoy communicating with you. So yeah, without further ado, the dividend ETFs we're going to be taking a look at. Fidelity High Dividend ETF. I really like this one a lot. I love the holdings that it has, and it's got a really decent yield. And next up, VIG, Vanguard Dividend Appreciation Index Fund. I also like this one quite a bit. It's like the S&P 500, but just the dividend payers. Now let's go ahead and take a deeper dive here. Through Qualtrim, you can see the dividend yield. It's kind of been a little bit everywhere, but is slowly trending upward. The expense ratio is 0.29%, so not too bad. I think I seen a thing the other day where Vanguard put out like the average is like 0.43 overall, the ETFs in the market. So this one, 0.29, it's not too bad. It means you're going to pay $29 for every 10,000 that you have invested in this. And I don't think that's too bad. The dividend yield is 3.52%. And it has 97 total holdings. You're getting a 3.52%, and you're getting over 11% in Apple, Microsoft. It's got Nvidia in there as well. Apple's at right at 6%, Microsoft's 5.5%, Nvidia's 3.5%, JP Morgan is 2.6%, Procter & Gamble's 2.5%, ExxonMobil's 2.3%, Pepsi is right at 2.2%, Coca-Cola's 2%, Chevron is 1.86%, and Caterpillar is 1.8%. So, pretty strong top 10. Pretty much all moats. The top 10 makes up 30.36% of the overall holdings in this. The sector breakdown, the top 3 sectors, you got finance coming in at 26% with this, electronic technology at 19.13%, and consumer non-durables at 12.32%. So pretty good breakdown here as well. It's a little heavy in the financials, but that is fine because this is a fantastic top 10. I really like this, and it's got a pretty decent yield for it to have such big names in here. And I think it's got a good growth path ahead of it. Everything I've read about this is just bragging about how good it is and how well suited it is for both bull and bear markets, because I mean, if the market goes down, you're just going to be able to add more for less, and then that's just going to make your snowball effect even better. But yeah, like everything is just bragging about it. Invest in dividend safety in a high rate environment, a well-diversified ETF. It's perfect for both bull and bear markets. Best performing high dividend ETF thanks to its high beta and sector selections. I like it a lot. As always, don't invest in something just because I say so. Always do your own research, due diligence, and make that decision for yourself. This might be something for you. This might not be something for you. I like it though, and I was just wanting to bring it to y'all's attention. Next up, we got VIG. You probably know what VIG is. If you don't, let's take a look into it then. Take a look here. Dividend is increasing a very nice up and to the right. Over the last 10 years, dividend's been increasing at a rate of 8.4%. Very nice. It's got a super low expense ratio at 0.06. Vanguard is notorious for having low expense ratios. So that means that you would pay $6 for every 10,000 that you have invested in this. So let's take a look here. The distribution yield is 1.9%, so pretty good. The top 10 holdings, Microsoft and Apple, yet again, makes up most of it. right at 9.76% total between the two of those. Microsoft at 5%, Apple at 4.7%, United Health Group at 3%, ExxonMobil at 3%, Johnson Johnson at 2.97%, JP Morgan at 2.9%, Visa at 2.5%, Procter & Gamble right at 2.5%, Broadcom at 2.42%, and MasterCard at 2.29%. Again, strong top 10, and you got you another lineup of heavy moated companies. I love moats. I love companies with big moats. I love free cash flow. I love buybacks, and you're getting a lot of that with this. Top 10 sectors, the top 3, electronic technologies makes up 15.74%, technology services make up 11.64%, and finances make up 11.5%. So very heavy in the tech there. You're looking at about 28% total tech exposure. But tech is the future, and if you're long tech, this might be a nice little something to look into. The thing I like about VIG is it's kind of like the S&P 500, but just the dividend payers. You take out all the ones that don't pay a dividend and just stamp them into an ETF, you get this. VIG, although it might not grow as quick as the S&P 500, what you're getting with this is a lot less volatility. Let's put in VOO here so we can just kind of see a side by side. Yeah, over the last 5 years, it's right in line with it. It's like 3% behind it. Yep. So yeah, you're getting a lot more spikes and you're getting a lot more dip down belows with VOO than you are with just VIG. But yeah, this is still a strong ETF overall. It's got a good little nice dividend yield, setting 1.9%. I think that's higher than the S&P 500. I think the S&P 500 is like 1.7, 1.6, something like that. But yeah, those are two, in my eye, pretty decent, pretty good little ETFs that you can buy and hold forever and just dollar cost average into. If that's something that you want to do, if that's your game plan, always look into things beforehand. Don't just do it because I said so. But yeah, two strong ETFs. I know a lot of people are running the ETFs and away from individual holdings right now, so that's one reason I was wanting to put that out. But yeah, hope everyone has a great weekend. Thanks for dropping by, and as always, take care. See yous.